With Iran's stricken economy set to be opened up to the world, many are starting to count what it means for global commodity prices. SBS finance editor Ricardo Goncalves joins us now. And Ricardo, just how big a player is Iran?
Anton, Iran is sitting on huge natural reserves, and that's why investors have already factored that into the oil price, which is down from about $60 this time last month to about 53. Now, Iran holds a massive amount of black gold, 158 billion barrels of oil reserves, most of it onshore and undeveloped. That's the fourth largest reserve in the world. It also has huge reserves of natural gas, 1.2 trillion cubic feet, the second largest globally. But a lot of that is needed to power its 78 million residents. So, with the focus on oil, some experts say international developers may seek to invest in the country, and that may add to current stockpiles.
In the very immediate term, we expect that Iran's production could rise by about 800,000 barrels per day. So it doesn't sound like that much, but compared to what they're producing now, that represents almost a 30% increase. The point to make with the Iranian oil fields is that they require investment to bring capacity up beyond that number.
And of course, more supply means cheaper oil and hopefully cheaper petrol. Now, all those bears waiting for bad news out of China, its economy is still growing with a number 7 in front of it. The market was expecting GDP of 6.8% in the year to June, but it was better than that, with industrial production and retail sales surprising to the upside. Now, that fed through to our share market today, which finished stronger, and it comes as the Bureau said building activity continued to rise in March. Resource stocks were mixed, but each of the big four did well. Westpac the pick of the bunch. Retail stocks closed higher, and that's despite a fall in consumer sentiment to the lowest level since December, according to Westpac. Tokyo's Nikkei was up, even as the Bank of Japan downgraded its growth and inflation forecast for this year. Shares on Wall Street rose despite weak retail sales numbers there, but that's the reason why our currency gained strength against the US dollar and is mostly higher across the other major global currencies. And on the commodity markets, gold is down while oil is up. And that is the day in finance.